Hello everyone and welcome back to Forex Scope, your go-to channel for sharp Forex analysis and actionable trading insights. Today, we're diving deep into the EURJPY pair, bringing you a precise look at the 15-minute and 1-minute charts. We'll be uncovering potential buy and sell signals and forecasting the price direction to help you navigate this market. If you're looking to sharpen your Forex game and stay ahead of the curve, you've come to the right place. Make sure you hit that subscribe button and the notification bell so you don't miss out on any of our upcoming analyses. Now, let's get straight to the charts and see what EURJPY has in store for us. This resistance zone is identified by two consecutive candles, the first being a bearish candle with a significant upper shadow, indicating a strong pushback from higher prices, and the second being a smaller bearish candle that opened slightly below the previous close and closed lower, reinforcing the selling pressure in this area. The prices in this zone range from approximately 179.353 to 179.441. The proximity of these two candles, their closing prices being very close and the highs indicating rejection, suggest a level where sellers have previously shown dominance. The volume during these periods also shows a moderate to high activity, further validating this area as a point of interest where supply might outweigh demand. The upper boundary is marked by the high of the first candle at 179.441, and the lower boundary by the low of the second candle at 179.353, creating a defined area of resistance that has been tested and shown to limit further upward price movement. The clear bearish momentum following these highs indicates a significant supply zone. This support zone is defined by a period of consolidation and rejection of lower prices. The first candle in this zone is a bearish candle that experienced a significant downward wick, indicating that sellers pushed the price down but buyers stepped in aggressively, pushing the price back up to close near its open, with a low of 178.622. The subsequent candle is a bullish candle that opened slightly higher and closed significantly higher, testing the upper boundary of this support area and demonstrating buying interest. The prices in this zone range from approximately 178.622 to 178.678. The significant lower wick on the first candle signifies strong demand entering the market at these levels. The following bullish candle's upward movement further confirms this area as a potential floor for the price. The relatively tight range and the clear rejection of lower prices suggest a cluster of buying orders. The low of the first candle at 178.622 and the high of the second candle at 178.71 form the boundaries of this identified support level. The previous price action shows repeated tests of this vicinity with strong rebounds. This support zone at the lower end of the price range, specifically between 179.219 and 179.217, is identified by multiple touches and a period of consolidation. The initial price action shows a brief dip to 179.217 before recovering, indicating a level where buying pressure emerged. The low tick volume in this area also suggests that sellers were not aggressively pushing the price lower, and buyers were stepping in to absorb the supply. The Bollinger Band lower band also hovers around this price area in the initial candles, reinforcing the idea that this is a demand zone. The price action demonstrates a resilience around these levels, with several candles showing wicks testing this lower boundary without a decisive break. This suggests that there is a significant accumulation of buy orders here, creating a floor for the price. The fact that the price subsequently moved higher from this level further confirms its significance as a support. The zone shows a clear pattern of buyers stepping in to prevent further downside, making it a robust support area. This resistance zone, situated between 179.335 and 179.334, is characterized by a period of price struggle and eventual rejection. The price attempted to move higher, reaching peaks around 179.34, but was met with significant selling pressure, pushing it back down. The Bollinger Band upper band is also closely aligned with this resistance area during the indicated timestamps, signaling that the upward momentum was being capped. The presence of multiple candles with upper wicks and the inability of the price to sustain levels above this zone indicate that sellers are actively defending this price point. The consolidation observed within this narrow range before a subsequent move lower highlights the strength of the selling interest at these higher prices. This area acts as a ceiling, where supply overwhelms demand, preventing further upward price movement. The price action clearly shows a battle between buyers and sellers, with sellers ultimately gaining control at these levels. Based on the provided 1-minute and 15-minute timeframe data, we observe a complex price dynamic. The current price of 179.334 is situated near a 1-minute resistance zone defined between 179.335 and 179.334, and also approaching the upper boundary of the 15-minute resistance zone, which is around 179.441. The Fibonacci levels indicate a potential uptrend bias as the price has moved from 179.286 to 179.318, price 1, price 2. However, the recent price action shows some hesitation and retracement from the highs. The tick volume has been moderate, suggesting that while there's activity, there isn't an overwhelming force pushing the price in a single direction consistently. The Bollinger Bands on the 1-minute chart are widening slightly, hinting at potential volatility, but the price is currently trading near the middle band, suggesting a period of equilibrium. Considering these factors, a short-term pullback is likely before a potential continuation higher. We predict a move down to around 179.307, followed by a bounce and a push towards new highs near 179.351, then a slight retracement to 179.328, before a stronger surge to 179.360, and a final consolidation around 179.340. This zigzag pattern reflects the market's current indecision but leans towards an upward bias, acknowledging the Fibonacci trend and potential for breaking the 15-minute resistance. The confluence of these indicators suggests a carefully watched area where a breakout is possible after some minor fluctuations.